Everyone talks about finding the perfect trading strategy, but few actually test whether their ideas hold up when the charts start moving. In this video, I'm showing you a strategy that doesn't just rely on gut feeling or flashy indicators. It's built on data, tested across live KuCoin price feeds, and backtested through thousands of candles to see how it actually performs in real market conditions. We're combining multi-time frame analysis, volume-weighted trends, and precision entries using RSI, MACD, and ATR all packed into one complete Python-driven trading framework. The result? A system with a 40% win rate, yet still profitable because the risk-to-reward structure and discipline in execution turn statistics into an edge. Let's break it down, step by step. I'm walking you through an upgraded crypto trading system, one that blends volume-weighted trend detection on the 4-hour chart with precision 15-minute entries. This system is engineered to give you higher probability trades by using smarter volume filters, volatility-adjusted risk, and dynamic entry rules. In short, trend first, then sniper entries. Let's break it down. Data and purpose. The script starts by pulling market data from KuCoin using the CCXT library. We fetch OHLCV, open, high, low, close, and volume, and organize it into pandas data frames indexed by timestamp. That's basic, but it's critical. Every indicator, every signal, depends on accurate, aligned historical candles. From there, the system computes two separate indicator sets. One tuned for the 4-hour time frame, which determines the market regime, and one for the 15-minute time frame, which finds precise entries and optimal stops. Think of the 4-hour as the what, the direction of the market, and the 15-minute as the when, the exact moment to pull the trigger. For H indicators, volume plus volatility, why this matters. On the 4-hour chart, the system leans heavily on volume-weighted indicators. We calculate VWAP and two VWMA windows, 20 and 50, on-balance volume with an EMA, and shaken money flow to capture money flow pressure. Why? Because price without volume is just noise. Volume tells us when moves are real. We add ATR for volatility and ADX for trend strength, and we also compute a supertrend to get a clear trend direction overlay. Finally, a 20-period volume SMA gives us a volume ratio so we know if current candles are accompanied by above-average activity. All these pieces together produce a volume-weighted, volatility-aware trend signal that's much more robust than price-only crossovers. If the VWMA 20 is above VWMA 50, OBV is rising, CMF is positive, and ADX shows a strong trend, that's a high-probability bullish environment. The reverse gives us bearish confirmation. 15M indicators, precision entries. Once the 4-hour trend is defined, the script pulls 15-minute candles for entries. The 15-minute layer focuses on momentum and microvolatility. RSI 14 for localized momentum, MACD for momentum shifts, ATR 5 for tight stop calculations, and short EMAs 9 and 21 for quick price structure. There's also a volume spike detector, a simple EMA of volume that flags when volume suddenly ramps up. The objective here is to enter in the direction of the 4-hour trend only when short-term momentum and a burst of volume confirm. The move. Trend identification logic. The trend classifier is not binary. It returns neutral, bullish, bearish, and the stronger variants strong_bullish or strong_bearish. It evaluates multiple confirmations: volume-weighted direction, VWMA, OBV, CMF, healthy volume ratio, super trend direction, and ADX strength. If multiple checks line up and ADX is high, we call it a strong trend. This multi-confirmation approach reduces false signals caused by short spikes or thin liquidity, which is particularly important. In crypto, entry rules, 15M, and dynamic parameters. Entry rules adapt based on whether the 4-hour trend is strong or just moderate. In strong trends, the system expects more evidence and uses tighter stops, while in moderate trends it requires slightly less and uses wider stops. For a long entry you're looking for RSI in a dynamic zone, MACD above its signal line and improving MACD histogram, price above EMA 9 with EMA 9 above EMA 21, a confirmed volume spike, and momentum that's non-contrarian. The system requires 6 or 7 confirmations depending on trend strength before it signals a trade. When a trade triggers, stop loss and take profit are set in ATR multiples, 1.0 times ATR stop and 3.0 times ATR target in strong trends, versus 1.5 times ATR stop and 2.5 times ATR target in weaker trends. That keeps risk proportional to current volatility and Rend context. Grading and trade advice. Every setup is graded A+ through C based on how many conditions are satisfied and whether the environment is strong. A+ setups are the highest probability and the script recommends full position size. B setups advise reduced sizing or waiting for confirmation. C setups suggest passing altogether. This grading is key for discretionary adjustments and for automated sizing rules. Section: Position Sizing, Volatility Adjusted Risk. Position sizing uses a 2% base risk per trade, but it's adjusted by a volatility ratio. Higher volatility scales down the risk to avoid outsized exposure in choppy markets. The formula computes the dollar risk per trade, divides by the price difference between entry and stop, and caps size at 95% of available capital if needed. This dynamic sizing protects the account during turbulent periods while still allowing meaningful exposure when volatility is low. Output and practical usage. When you run analyze_symbol, the script prints a compact market readout, 4-hour trend state, VWMA/OBV/CMF values, super trend direction, ADX and ATR, and the 15-minute signal conditions with grade, stop, target, position size, and risk reward. That output makes it straightforward to decide whether to place the trade manually or to wire it into an execution engine for automated entry. The script also includes robust fallbacks and error handling so missing data or calculation issues won't crash the run. Crucial FO. Our real-world usage. What makes this improved version stronger than a simple EMA/RSI strategy is the incorporation of volume weighting and volatility awareness. VWMA and CMF validate that big players are behind moves. Supertrend and ADX filter noisy price swings. ATR-based stops adapt to changing volatility, and the 15-minute timing layer lets you enter with precision instead of guessing. Together, these measures reduce whipsaws and improve the probability of capturing meaningful moves. So that's the logic behind the strategy. Every signal, every rule, and every number tested, verified, and tracked. A 40% win rate might not sound exciting at first, but when your average winner doubles your average loss, that's not luck, that's math working in your favor. And that's the mindset of a quant trader: structure, not emotion. Thanks for watching. Trade with rules, not emotions. I'll see you in the next video where we'll start improving the code and running performance tests live.